Right, we are back in action. Bit of a different setup today, so let me know if you have any feedback. I am recording on the MacBook as well, so the quality of my beautiful face is a little bit less, but that's not what we're going to be focusing on. We are going to jump onto TradingView, and I'm going to be teaching you boys how to basically trade with what we call support and resistance, right? So I've mentioned briefly about support and resistance, but I'm going to give you a full breakdown now on this chart, exactly what's going on, okay? So if I just put my face in the corner, there we go, myself in the top here, you can still see me, still here, this is live. What we're going to do, let's say, I'll walk you through the basic trading day, okay? So you've got your mobile phone, which you're going to be using to actually place the trades on MetaTrader 4. I'll show you right now. This is exactly what you will be doing, okay? You load up MetaTrader 4 on your phone, and you have that in the background. Now, do you remember why I told you to do it on separate devices? Because when we are looking here on TradingView, if we notice something that needs direct attention, we can jump straight onto the phone, place the trade, and we're good to go. There is no delay. Now look, if I was doing it on here, got TradingView open, then I have to open up the different app, I have to open up MetaTrader on the MacBook, it's long. That slight delay, you might miss the perfect position, so you want to be careful of that. So that's why we use two separate devices. Cool. So you got the device ready, you got the MacBook ready to look at the charts with, you've got your pen, which is one of the most important tools, and your paper. You're going to sit down, you're going to write out your strategy for the day, be disciplined, wait for the right setups, don't trade unless I've got, 90% conviction. Whatever your strategy is, whatever rules you're trying to set for yourself as a trader, you will write them down before you begin entering the charts, okay? That is paramount. Make sure you are doing that first, because if you don't, you're going to make mistakes that could have easily been avoided, okay? Once you have written down a strategy that you want to follow, you're then going to obviously type in on Google TradingView. This is what it looks like. We'll use gold as an example, if it decides to load, which it's not looking like it's doing right now. Okay, fix that issue. Back. So, you're on TradingView, you've loaded it up. We're going to go for gold. Look at that glistening watch. Beautiful. We're XAU USD, so it's gold against the US dollar. So, what we're going to be looking at here is obviously the price, which is 2,557 US dollars. Now, if you remember in previous modules, I spoke to you about how we trade the currency, which is the metal in this case, against the fiat currency, which is the US dollar, okay? Now, what does this mean? So if I'm in the trader's mindset, it's the day in the life of a trader. I've got my strategy, loaded up TradingView, I've picked the currency that I'm going to be focusing on for today, which is gold. I then sit down at the charts, ready to trade. Now, we're not just going to jump straight in and start gambling, okay? Because obviously you're going to lose money. We are trading to win. We're not trading to trade, okay? Keep that in mind, very important. So what we're going to do next then, we're just going to have a brief little overview of the chart itself first. 5-minute charts, the 1 minute, the 30 minutes, etc. Just have a look at the chart, see what it's saying, see where the monthly time frames are at. Okay, check everything. Check as far back as you want. 4 hours, massive, massive bullish movement. Absolutely ridiculous, as you can see. Still powering on, and that's on a 4-hour time frame, which is crazy. Honestly, I haven't traded for a while, so to now come back to the gold price and it's 2,500, that is ridiculous. So anyway, point being, you're going to have a brief little overview of what's going on right now on the current time frames. Then what you're going to do is you're going to go to either Google and you're just going to type in US economy news, okay? Or you're going to go to a YouTube channel called Bloomberg Business. Now, Bloomberg Business is just a US economy business news channel, right? It live streams the US economy news practically every single day, I believe. So every day you log in to trade, you can check their YouTube channel. Also listen out for US economy news, because let's say, for example, they mention that, inflation rates are hinted at going 9% higher in the next 6 months, right? Random example, but let's say inflation's going up, that means basically, right? Or it's hinting at going up. Now, when it comes to trading, it's very important you understand that the news itself doesn't affect the price. People affect the price. Volume affects the price. As you can see the volume at the bottom here, these little bars up and down, that's the volume, right? Buyer volume, and you got the seller volume in red. So what this basically means is that people affect the price. So if someone hears on the news, inflation's coming in 6 months, that could influence their decision right now. So people see that, oh, inflation's going up, which means the value of the US dollar goes down naturally, okay, because the purchasing power isn't as high as it used to be. Everything's getting more expensive. The value of the dollar stays the same. So naturally, they outweigh each other. So what becomes more valuable? What becomes the more valuable currency? Well, things like crypto, Bitcoin, and things like gold, okay? So naturally, usually when the news comes out and it says that inflation's rising or inflation's going up, or there's a hint at inflation going up, that usually means that gold will also follow, okay? Now, whether it happens instantly, whether it happens in the next couple of days, couple of weeks, couple of hours, whatever, is completely different, and you need to make your own judgment when you're basing that decision. But for the most part, that's what we look for. So what I would do is I'd sit down with my strategy, I'd go and look at the US economy news in the past couple of days, or in the live streams that are literally happening right now. I would then observe the volume on the price chart, and I think to myself, right, what is my bias for today? That's what you're looking for. You're looking for a bias, but you want to make sure that this bias that you adopt is also adaptable and it's also open-minded. You don't want to just say, right, I'm looking for buys and buys only, because if you start to notice that, you know, let's say we've got the RSI indicator here, the RSI divergence indicator, which I will give a full breakdown on in a future module. But let's say this starts to point to bearish signals, which means the price is going to come down, sellers are going to gain control. You have to be able to switch your bias. You can't just stubbornly adopt the same one and never switch it, okay? So that is how to start your trading day. That is what you will be looking for. You load up TradingView, you got the charts ready on the MacBook, you got your phone for MetaTrader 4 or 5, whatever you decide to use. You got the notebook and pen. That is all you need as a trader, okay? And your shades. So you got to look like a bad man while you're doing it. Helps you make more money, okay? So with all of that being said, we're going to now touch on future modules, support and resistance. We're going to touch on RSI divergence. We're going to touch on volume. We're going to touch on what causes breakouts in the market. We're going to touch on trend lines, all of this kind of stuff. So if I go to this little whiteboard here, I'm going to give you an amazing drawing demonstration. So let's say we have absolutely terrible drawing, but let's say, for example, okay, how do I get rid of that? How do I move the screen? That's what I want to do. Look at that, expert. Right, we'll try that again. So we've got a chart, right? Price, got a little bit of, let's say, a downtrend. Okay, boom, like that. So how do we know it's a downtrend? Because it is lower lows and lower highs. That indicates a downtrend. If it was the opposite way, so like this, my drawing is insane and I can't see the screen. So not this one, like this. Right, boom, higher again. That's an uptrend. Can you notice the difference? Now, apologies for the terrible drawings. I've never used this app in my life. I'm literally just trying out this whole MacBook Loom thing, and it's pretty cool. I like it. I think I'll do this more often. It gives you a bit of a better demonstration. So this one is an uptrend. The reason for that, can you notice it? Because the lows are getting higher and because the highs are getting higher, okay? Same on the opposite end of the spectrum. This is a downtrend because the lows are getting lower and the highs are also getting lower, okay? So that is a trend line, right? So it's this, for example. Again, don't make these accurate. It's just random drawings. So let's say the price keeps doing this. Cool, we go up again. But then this time, for whatever reason, the sellers gain a little bit of control. And you can see the trend line here, okay, has stuck. It's respected this line. From the bottom point, it retested it again a little bit here, but it never broke this line that I've drew. Because the way that we draw trend lines is you kind of line up the price points, okay? So we've got this bottom price point here. This one went a little bit higher. Don't matter about that. This one a little bit higher. But this one touched the same price point, but it didn't go lower. If you draw a line diagonally and you follow the trend as it's going upwards in a diagonal line, right? This line is your like indicator. So for example, if this price comes back down for whatever reason and it breaks the line, so if you then line this up again, this is the new price point, okay? This was the trend, price came up, sellers gained control momentarily, broke the trend line, came down lower than all the previous points, right? Because it broke the line that we've drew on the chart. So on an actual chart, you'd go to trend line, see if I can do it. All right, you click trend line, and you just draw. For some reason it's not letting me do it. Right, you just draw a trend line. I don't know why it's not letting me click trend line. But anyway, it would happen the same way, right? You'd be able to click it, you draw a line on the chart that would match up with the bottom points, right? So let's say this is a trend here. Yeah, it ends there, goes up again, ends here. And I draw a line diagonally matching the bottom points, and it breaks through that line that I drew on the chart. That is an indicator of a trend reversal, potentially. Could be a trend reversal. So look, it's breaking through. We call it a breakout because it's a trend line and it's broke out. So if we drew a new line, it's below this previous low point. You understand? So it's broke past the trend line. This was an uptrend, it broke past it. So you want to, when this happens, you want to be careful because it could just come straight back up again. It could have just been a momentary spike, right? And then it could just go and shoot through the fucking roof. And that's when you have these massive, bullish trends all the way up. These bullish, what we call impulses, all the way up, okay? Anything can happen in the market. Anyone that tries to teach you how to trade and they say like, yeah, this is an 100% guarantee is lying to you because anything can happen, right? Because like I said, it's nothing else externally other than people can move the price. And people usually base their decisions upon emotions. So let's say it's in a trend line here, yeah, and it breaks the trend line. Let me get rid of all this mess so you can see it again. It broke the trend line that we drew, okay? It went lower than the previous low points, so it's no longer in an uptrend. You understand? Are you with me? Yeah. People are going to see that and think, oh, it's broke the trend. It's going to go down. It's going to go down. It's going to reverse. It's going to reverse. All right? That's what the majority of people are going to think. Yeah, okay, it's gone down. So I'm going to start selling. Quick, sell, sell, sell. So everyone's going to start selling. Now, there's two things that can happen here. Either the majority of people start selling, so the price, maybe comes back up again, and then boom, it dips down because everyone's starting to sell now because they got scared because it broke this trend line, yeah? And now it carried on and went down, or it starts to form a downtrend, yeah? Whatever happens, starts to come down. That's one option. Maybe the people were right and the people had influence over this price. Everyone got scared. Fear impacts their decisions. Their decision was to sell. Because so many people are now selling, it influences the price in real time. People influence the price, nothing else. The news doesn't influence it by itself. Your fucking predictions don't influence it. It's action. It's people actually buying or selling the price. The currency, sorry. All right? Hydration break. That's the only thing that does it. Another thing that can happen is, like I've mentioned in previous modules, we're not trying to think like 99% of people because 99% of people in trading lose money. You've always heard the statistics before, like, 80% lose money, be careful, you have to be prepared to, lose all the capital that you invest. So another strategy that you can adopt, and this is just me firing off ideas at you just to give you a brief introduction of how trading works. But another thing that could happen here, it's broke the trend line, okay? So what we call smart money, which is basically the big companies that have literally, like, they're the sharks, bro. They're the whales, you know what I mean? They're the fucking big boys. They have millions and millions of dollars that just throw it into the market. And in real time, they can influence the price, like I mentioned before. So they will see this and they will know, because they're smart, that's why we call them smart money. They will know that 90% of people are going to see that trend breakout, because this is a very bare basic strategy, okay? They're going to notice that, okay, 90% of people are going to see that and panic and start selling. So what we're going to do is we're going to wait for them to sell a little bit. We're going to target their stop losses, which will probably be, I don't know, up here maybe, right? Okay, it's broke out. It's going to keep going down. Let's sell, sell, sell. Set a little bit of a stop loss here. Boom. They're going to target that stop loss. So what they're going to do is put millions of dollars, pump it into the market very, very quickly. They're all going to buy. So they're doing the opposite of what everyone else is doing because they know that everyone else is going to sell. So they're going to do the opposite because they have the advantage because they have the most money and the most buying power. The price is actually going to, instead of going down, which it should do, right? If you look on a logical basis, it broke the trend. That signifies a trend reversal or a potential trend reversal to then continue down, right? However, smart money knows what 90% of people are thinking. So you have to start as an individual trader, start thinking like smart money. Cool, it's broke the trend. But what would smart money do in this situation? Would they sell like everyone else? Because sometimes it can happen and it can just logically follow the trend and continue down. But sometimes they might buy it, they might put millions of dollars in, and then boom, it just shoots all the way back up. And you're like, well, I followed the trend breakout strategy that I learned from YouTube. Why did it not work? I sold here when I noticed that it broke the trend. I sold, and then it just went through the roof. Why did that happen? Well, we call that a false breakout. Now, I'm going to get into all this little jargon and technicalities later down the line in this course, but just understand there are certain things that can happen, which means there is no 100% guarantee ever when it comes to trading. Right? There's always something that can happen that could potentially flip it the other way. Now, one thing I will say when it comes to you marking out your strategy, I'm going to give you techniques, I'm going to give you the terminology, I'm going to teach you what everything means and why things happen, but it's up to you to develop a strategy that works best for yourself. I can't say do this, do that, because it's emotions that affect your decisions a lot of the time, okay? So you might have just a different trading style to me. I like to trade quite aggressively. I like to trade quite fast with a lot of money, very quickly, very high risk trades, right? I like to do what we call scalping. So for example, if we're in a phase of consolidation, we'll go over here a little bit. I like this drawing up, this is fucking cool, bro. Let's say we're in a phase of consolidation, up, down, very boring. Nothing's really happening. It's going to the side, yeah? We call this consolidation. It's not going diagonal in any real way. You can't really tell where it's going to go. It's just, boom, side to side, yeah? This is consolidation. Now, you can still make money in a phase of consolidation. The way that we do that is by a term called scalping. Can I do text on this as well? I can. Look at this, boys. Wow. Add a text box, I guess. Let's add a text box. We'll add one here. There you go. Cool. So what do we call this? We call it scalping, okay? And if you remember as well, this is called, I'm getting good at this, boys. Seeing this? Consolidation. I don't want to clutter up the screen. This is getting on my nerves. Right. Scalping in a phase of consolidation is how you make money. Now, the reason for that is because it's not going in any direction like this one. This is a trend. You can predict it. It's going up. Cool. When it hits the low point, I'm going to buy it. Yeah, cool. Now it's gone up. I've made loads of money, right? Or it breaks out the trend. I can sell it. There's very key, obvious indicators in this one that you could potentially follow that could make you money. Here, you don't really know what's going on. So it's a very neutral bias. That's what we call it. You adopt a neutral bias. You don't know if it's going to go up or down. But you can still make money while you're waiting for this to fizzle out. How do we do that? We do scalping. We do very fast, very high-risk trades, very quickly. We're in and out, fast money. So let's say, for example, we notice that it's consolidating. All right, we've seen it happen because this line's not been broken. This line hasn't been broken. This is resistance. This is support. I'm going to get into that in the next module. Very important for you to know. It's a very bad basic, but I'll get into that. But we can see that the price points have practically matched each other every time they've gone up and down. Okay. That's how you kind of know it's consolidating. Sometimes it'll be a little bit higher, sometimes it'll be a little bit lower, but for the most part, it's matched the exact same price as before. So we've noticed it's consolidating. So now what we're going to do is when it came down again here, we're going to be like, okay, let's buy in very quickly. We're going to place a buy position at this low point, or, closest to possible as the previous low points. We're going to buy here. We're going to do a very high lot size. I taught you boys about lot size before. Basically a very high risk. Okay, we're going to put a lot of money into this trade. When it then consolidates back up again to the previous points, because it's a very easy exit point, we can see here is kind of where it ends, right? So we bought in here, went up here, it came around this kind of area. Because we're on such a high lot size and such a high amount of investment, and it's a very quick trade, it's gone up. Here it is. We're going to cash out here. Made a little bit of money, but it's a high risk trade, so you probably made quite a lot of money just from that one quick movement up. Okay, we cash out here. Then what we're going to do is we're going to sell. Straight afterwards, we're going to cash out the buy position. We're going to place a new position, which is a sell position around the top. We're going to then sell because we know it's consolidating. It's going to go up, down, over and over again. It's predictable, okay? Now, you do have to be careful because there will be a phase where this consolidation actually breaks out. So cool, it's consolidating, and then you'll notice it comes up a little bit higher than the last ones, and then boom, it'll break out, okay? You have to be careful of this. So again, trend lines. We draw the trend line. Apologies for the terrible drawings, but yeah, we've got a trend line here. It follows the tops, the peaks of the price. You can do this at the bottom as well. Follows the bottom price, whatever. If it did this, came up and then broke lower than the bottom points, then again that signifies a breakout. Do you understand what I'm saying here? I hope I haven't lost you. And this is quite a long one, but it's packed full of value. Goes up, above the price. This means potentially a breakout. If this happens, if it goes above the previous prices in consolidation, or it goes lower than the previous prices in this consolidation, then you want to be careful because it could potentially indicate a new trend forming, and then it will continue like something like that, okay? However, when you're in this phase of consolidation, you want to make the most of it. You can still make money by doing what I just said. Buy low. You know it's going to come back up to around here. You cash out the buy position. You then instantly sell straight away. You know it's going to end probably around here. You cash out the sell position down here. You buy in again. Cash out the buy position here. Sell. Boom. So it's constant. You buy in, goes up. You're cashing out that position, taking the profits. Placing a new sell position at the top. Goes down again. Cashing out the profits. Buying in again. Goes up. You can make constant money like that. Now, of course, it's not that easy. There's other factors that come into play when you look at the actual real chart. As you can see, it's very sometimes unpredictable. So you have to be careful. But for the most part, that is what you can do in a phase of consolidation to still make money. We call this scalping. Just very, very quick. That was terrible. Very, very quick trades, okay? Up, down, up, down. Yeah, so scalping. This is a very important term. Make sure you remember this. Don't worry, lads, the drawings will get better the more I practice on this app. I like it, though, it's cool. So what have we covered so far? Let me give you a brief summary. We've got the uptrends, we've got the downtrends. You can notice them by the lower lows and the lower highs for a downtrend, and the higher lows and the higher highs for an uptrend, okay? So please keep that in mind. I want to practice the text box real quick. Let's see what we can do. Uptrend, and then we put this here. This is an uptrend. Add another text box. Downtrend. We zoom that up. Okay. So now you're starting to get the hang of it, right? Downtrend goes down, uptrend goes up. Very simple. Over here we have scalping. Scalping is a term that we do when it comes to consolidation. Consolidation is a phase that the market goes in when it's not really going anywhere. It's kind of just hovering around the same kind of price point. Up, down, up, down, up, down, up, down. Yeah, that's consolidation. So this is kind of the bare basics that you're looking out for when you go into the chart on TradingView and you're actually looking at what's going on. If I was to ask you now, what is this? What is this? What do you think it's forming right now? After what we've just learned here, yeah? What do you think this is? Low position, went up, low position, went up again. What can you notice? You should start to be able to pick it up now, yeah? This position was a low. It went high, formed the high point, closed the candle, came back down. The lowest point was higher than the previous low. Then what did it do? It closed above the previous high. So what is that? Higher highs, higher lows. Yeah, it's gradually on a diagonal angle getting higher. Do you understand? It's closing higher, both on the top and the bottom. Yeah? So that's an uptrend, or it's at least potentially forming an uptrend. It hasn't actually been, determined yet. This might just go all the way back down. You never know. So like this, you got to think about it on a long scale. This could be a bigger picture. All right? Maybe this is the uptrend. Maybe this here, look, this could be the uptrend. Low point, up, higher low, yeah? Up again, higher high. Then it might now just shoot all the way back down again to here and form an uptrend. Can I draw a trend line, please? Let me do a trend line. There you go, look. So it might start doing this, yeah? So instead, this might come all the way down and form a new low. So instead of just doing it here and then up, it might not be a little uptrend, it might be a massive one. So you have to consider all eventualities when it comes to trading. This is my point. I'm just trying to educate you on all the potential possible scenarios that could happen so that you're aware, yeah, this is what it looks like, but this could also happen as well. So let me prepare for this accordingly. This is why your stop loss is very important. This is why risk management is very important as well. Okay. I want to see if there's a way, add a little body of text. What does this mean? Nice, I can just type. That's cool, because that means I can just type out what it is that I'm saying. Nice. Okay, yeah, so moving forward then. Doesn't allow me to delete it. That's cool. Moving forward then we have scalping, uptrends, downtrends, consolidation. Okay, remember all of that? Very simple. These are the three things that you're going to most likely see the most when it comes to you loading up the chart. So if you load it up and you're like, right, I have no idea what I'm looking at. It's just a bunch of lines. What's going on? At least now you have some kind of name for what's going on, okay? So just to recap again one more time. Higher lows, higher highs equals uptrend, yeah? Lower lows, let's find it. Lower lows, lower highs equals a downtrend, all right? Very simple. And again, everything comes down to volume in the market. Everything comes down to who has control over the current price. If it's a downtrend, it means the sellers have control. If it's an uptrend, it means the buyers have control. Yeah? You can watch this back as many times as you need to. Very important for you to understand. Scalping, it just basically means they're fighting against each other. No one has real control yet. The buyers and the sellers are kind of at an equal level. And that's why it consolidates. That's why it doesn't really move anywhere. Cool. One last thing to touch on then, as this is kind of like a brief introduction to just the overall markets and what it is that you're looking at. One last thing to touch on is this here, which is what we call an impulse. So you can find it actually on the chart. If I go and find one, maybe like on the 15-minute time frame. This. So this, you see how it's just one massive green line. There's nothing else. There's no red, right? It went from down here, which is kind of like a bit all over the place, bit of an uptrend, I guess you could say, if you were judging it based upon this. And then it just shot right into a massive impulse all the way up, just a big line. When it's a big line like that, so we've got the chart, cool, and then boom, big line, yeah? This here, and it doesn't matter whether it's down or whether it's up, doesn't matter. Both of the times when it has a massive spike like that, either up or down, we call this an impulse, okay? An impulse is just, it means it's been brewing. It's been brewing for a little bit. So, impulse. Let me show you. There you go. You need it any bigger? This is an impulse. Understand? Big, massive spikes in price movement is an impulse. Now, the reason this happens is because while this was building up, so let's say you have a chart, it's going kind of up a little bit, the sellers are still kind of fighting in this range because it hasn't fully just spiked up yet, right? It's gone up, the sellers gained control momentarily, went down, up again, sellers gain control, down. So they're kind of fighting, but the buyers have more control because there's an uptrend, okay? Obviously, you can flip this on its head. The sellers have control if it's going down, whatever. When it just spikes like this, it's because the buyers gained so much control and the sellers kind of just gave up that the price just went through the roof, okay? Now, if you can predict when that's going to happen, and we use the RSI divergence indicator right here to do so, which I'll make a separate module on, then you're going to make a shit ton of money. Because then you just ride the wave. There's no resistance, there's no fear, it's just bam, straight to the roof. That's when the serious profits can come in. Anyway, I hope you can take something from that in terms of basic terminology and what we look for on the charts. The next module is going to be about support and resistance, which I touched on briefly in the consolidation phase, but I'm going to teach you exactly how to find it, what to look out for, and when to maybe change your bias when it comes to trading. But I hope you've enjoyed this. I hope you've enjoyed the new setup as well. I will keep practicing my drawings just for you guys. But with that being said, thank you very much, and I'll see you in the next module.